Good morning, everyone. Welcome to our daily Commodities and Currency Research Club podcast, where we will be updating you on the key fundamental insights as well as on the daily technical levels related to the commodities and currency markets also, which are majorly traded on MCX. So, this is in addition to our live evening session, which we are conducting primarily to update our clients on the daily basis on the key technical levels as well as updates on the key data which are released in the evening. Now, let's start with our daily updates. So, considering first the precious metals. Now, what we have seen in yesterday's session is that gold prices have surged to nearly to all-time highs in the international spot markets. The previous all-time high was 2685 per ounce. Now, yesterday it came close to that all-time high at 2683 levels. And in the Indian markets also, we have seen the prices surpassing 78,000 per 10 gram levels in the local physical markets of Delhi, Mumbai, and Hyderabad, where there have been some surge in the spot demand. But overall, the prices have been very resilient to breach above that all-time high levels in the international markets. And traders are also worried in the local markets that this could impact some festive demand for this Diwali because of the higher prices persisting. So what we are seeing is right now that because there are certain macro cues which will be released in the evening session, that the US retail sales is due, that we are expecting ECB monetary policy meeting where ECB might go ahead with further rate cuts. We are also expecting that because the US Eurozone inflation is below its target, so there will be some further rate cuts from the ECB side. Now, US weekly jobless claims are also due, and Fed manufacturing surveys will be released. What we are seeing is like retail sales might be continue to remain steady because of the Retail Federation, which has recently issued its look ahead in the data, which shows that US consumer spending continues to remain modest, powered by sturdy hiring, low unemployment, and healthy household finances. US job market is still stronger than expected. Household income and consumer spending grows modestly, and the overall the market is anticipating that the optimism regarding the rate cuts of an aggressive rate cuts in the November meeting is still fading, and that we can expect some 25 basis point of rate cuts in the November and December meetings for the US. Overall, Eurozone inflation continued to ease. We are seeing that Bank of Japan has also have the urge to slow down the monetary easing because they might not go for further rate hikes in the coming October meeting. And on the manufacturing industry front, the global manufacturing industries continues to weaken, which is still impacting the metal prices on a global level. However, dollar index has also continued to march ahead. We have seen like the overall above 103 levels on the international front, where still it has a room to rise up to 104 levels amid US retail sales expected to remain steady. China has come out with some stimulus measures in the morning today, where they have listed that whitelist projects for there that could be supported up to 4 trillion yuan, which is already above the 2.2 trillion yuan already deployed by the Chinese government for the support of the white list projects. But it is still less than the economists what they are expecting. Because they want to China wants to shore up its growth in the last quarter, and economists are still disappointed that the recent measures announced they might not be as sufficient to shore up its growth above 5% in the last quarter. So overall, what we are seeing is that precious metals may find resistance on the higher side, while gold and silver is expected to trade on a range bound on a daily basis, while base metals is expected to remain still under slight pressure because of the disappointment from the China economic measures. Now let's talk about the energy complex. What we have seen is like crude oil, which spiked from $68 to about $74 in last few weeks because of the escalation in the geopolitical front between Iran and Israel. has now already lost its momentum, and it has come down to below $70 on WTI front, because Israeli Prime Minister has assured the US President that they might not go ahead with striking its oil facilities as well as nuclear targets, but they might consider striking their military operations. So because of that, the energy complex and energy prices have been under moderate pressure seen in the last few sessions. We expect that crude oil prices may remain lackluster in day trade today amid the easing geopolitical worries as well as strength in the dollar. Now let's see some of the key technical levels which we can expect in the day session today. MCX gold and the December futures, what we can see is like the close was around 76,664, and the supports expected is 76,435 and 76,110 levels, while on the higher side the resistance may be at around 76,840 and 77,160 levels. For silver, again, closing in December futures is 92,183, and the supports could be expected around 91,720 and 97,770 levels. On the higher side, resistance is 92,900 and 93,260 levels. For the crude oil side, 5923 was the close yesterday. Supports are 5841, 5790, while on the higher side, resistance is 5975 and 6058 levels. For copper, the close was 821 levels, and the overall the supports are 818 and 814 levels, and resistance on the higher side is 823 and 828 levels. So this is all about our technical level for key commodities, and we will be coming up with more updates on a daily basis, and we wish that you have a successful trading day today. So thank you very much.